Hey there, welcome aboard. It's Walter here. Glad to have you here. And we're going to talk today about random markets. This is a really I think it's the reason why this topic is so popular is because we hear a lot about it, especially in sort of the academic circles. People will say things like, oh, the markets are random. There's nothing you can do, blah, blah, blah. And in fact, I've got here let me share this with you. Here, a book. This is a book you may have heard about. This is a book by Mandelbrot, who's actually a pretty famous dude. This Mandelbrot character, and what he shared with us in his book, the Misbehavior of Markets, I think it's called. Yeah, right here. The Misbehavior of Markets by Benoit Mandelbrot. Really famous if you're into chaos theory or what have you. But what's interesting about it is how he talks about how, basically the markets are random. And this is a very common thing amongst academics who've never made any money in the markets. They will tell you that it's random. So my question for you is, and what I thought would be a very interesting topic to show you, because I've done this before and I've often encouraged my students to do this. By the way, if you enjoy the stuff that we're talking about today, you may enjoy the Small Accounts Big Profits course. You can click the link below this video or above this video to get in on that. What I thought we would do then is we could simply share. What I'm going to do here is I'm going to share this chart. This is what is this? I do believe this is I do believe what we're looking at here is our Aussie 8-hour chart. That's right, Aussie 8-hour chart. So what I'm going to do here is I'm going to say, okay, all right, Mandelbrot, you're right. The markets are random, and I'm going to put an indicator on here, not because I think you need an indicator, but because I think it helps sometimes for people to hang their hat on something. So we're going to use this indicator to exit the trade, not to get into the trade, which is interesting in itself. And we're on the 8-hour Aussie chart. I'm ready to go. So what I'm going to do here is I'm going to just randomly stop the chart. And when it gets to a place where I think, maybe it's time to take a trade or whatever, we can just randomly go, okay, we'll go long or we'll go short or what have you, right? And you can do this by pushing the space bar key on your Forex tester. Let's say that I go, okay, you know what? I'm going to short this bad boy. And I could just randomly flip a coin and it says short. Or I might say, it's hit this trend line a few times and it's going to probably fall or whatever. It doesn't really matter. But let's say that I flip a coin and I come up short. All right. Sell. So I'm going to put my sell stop just below the bearish candle here. And I'll put my stop loss up above the highs here. And I will wait when this trailing moving. Let's say that it does go lower. If it goes higher, then maybe I'll reverse and go high. But if it goes lower and triggers me, I'll wait until my moving average turns. And that's how it should be a sell stop. That's how we'll know if the trade's over. So it's a trailing exit. And I've talked about this okay, so it got stopped out. All right, let's say I flip the coin again. And we'll go sell. So I put my sell stop right here. And I like it. I like it a lot. And my stop loss is right here. Again, I could have easily gone long, but it would have to trade higher to make me go long. And just like it's going to have to trade lower it did go lower, to make me go short. Now, see how the moving average is pointed down? I'm going to get out of this trade when the moving average points up. So that's called the moving average slope. It's sloping down right now. If it goes up, I'll get rid of this trend line because it's kind of annoying. See how it's still pointing down? That means stay in the trade. Still in the trade. Okay. Wow. Still in the trade. Okay. All right. Still in the trade. Wow. This is awesome. Okay. Out. So now what I do is I close the position, and that's a sell trade. And that was, let's just say I get a random, I'm going to randomly choose to buy now. I could flip a coin or whatever, but I'll put a buy stop above the high here. And I'll put my stop loss down below the low, and I will just wait for the market. If it triggers my buy order, I'll just wait for it did. And I'm just going to wait for the moving average to turn down before I get out. Okay, it turned down. So I'm actually going to get out of this trade at a loss, but not nearly as bad as it would have been if it hit my stop. So I actually lost less than 1R here. Let's just, you know what? Let's just randomly forward a bit further and see if we can get, let's say we're going to sell here. So we'll use a sell stop here. And my stop loss will be up above this swing high here. And is it going to go lower? No. Yes. Yes, it did. And okay, if this moving average flips back up, I'm going to get out. What I'm saying here is that the reason why I'm doing this, and I would encourage you to do the same, is the reason why I'm using this trailing exit, this moving average trailing exit, is because if I do hook into a lucky, strong trend, then did that go up right there? I think it did. Yes, it. Hold on. The slope right here is 72.93, and the slope right there is 72.94. Okay, sorry, I messed up. I should have pulled the plug here, so I will, and I'm out. There it is. And I could, again, do the same thing. The reason why I'm doing this is not because I think it's makes sense to flip a coin and get into a trade, buy or sell based on the flip of a coin. I think you can do it, and I think you can make money. I think the key is to make really big winners when you get them. And a great way to do that is to use this trailing exit, this moving average trailing exit. You just wait for the slope for the moving average to change, and then guess what? It's trade over. That's it. I'm going to put another sell stop here. We'll just see what happens. We're in. Sweet. Oh, that's awesome. And did that turn up? No, it's flat. So it was at 73.40, 73.40. So now, yeah, so now it's done. Okay, so this one will close this one too. And that one was good for another 79 pips, which is okay on the 8-hour chart. It's okay. So there you have it. So that's basically what I wanted to share with you today, is that it is possible to enter the charts randomly, random entries, random entries, as long as you have an exit strategy that takes a big chunk out, and test it for yourself. I tell students all the time, I said, when they're struggling with a system and they're trying to figure it out, I said, look, you're focusing on the thing to focus on here is the exit strategy. And the way to do this is to simply use a trailing exit or really a hyper aggressive target. I have a friend in London, he uses a 20R target. So he's risking $100 to make 2,000, for example. And that's really where the key is. If you want to view the markets as random, and I know traders who do, then your entry doesn't matter. It would just fine. Take the focus off of that and focus instead on the exit strategy. And the really good one is the moving average trailing exit, like I showed you. If this kind of stuff interests you, you may be interested in the Small Accounts Big Profits course. Click the link below or above, and we'll see you in the course. Okay? See you later. Bye.